Good day, YouTube. This is Jay Money with Falling Forward Financial. Just an update here on NVIDIA. I've covered them a couple times around the channel, as well as some other semiconductors, AMD, Intel. I've covered quite a few times. I still have shares of Intel and a couple of NVIDIA. But where will they be in 5 years? As you can see, this just came out 2 days ago. So they received another blow last week after restrictions were imposed on sales of its data center chips in China. Chipmaker is on track to take advantage of the new niches within the data center and gaming markets. Multi-billion-dollar opportunities that NVIDIA is sitting on could help it come out of the slump for the long run. And the bad news just doesn't seem to be stopping for NVIDIA. The graphics card specialists received another big blow last week after the United States government imposed restrictions on sales of data center chips, Hong Kong and Russia. According to a filing with the SEC, NVIDIA reported that the U.S. government has imposed a new license requirement effective immediately for any future report to China, including Hong Kong and Russia, the company's A100 and forthcoming H100 integrated circuits. The restrictions will also apply to future NVIDIA products that match or exceed the performance of the A100 chips, as well as the systems powered by such chips. NVIDIA stock cratered on the news as China is reportedly a big market for the company. The tech giant slashed its fiscal third quarter revenue guidance by $400 million thanks to the restrictions. The company was anticipating $5.9 billion in revenue in the current quarter, pointing toward the big drop over the prior year period thanks to the weakness in the gaming segment. The data center business was one of the bright spots for the company, with year-over-year of 61% and $3.8 billion, but the restrictions could knock the wind out of the data center business growth. In all the difficult time to be an NVIDIA investor, the stock is down 53% in 2022 and could head lower as the company is contending with multiple headwinds. But investors shouldn't forget that NVIDIA stock has appreciated 220% in the past 5 years, despite bouts of volatility, and has handsomely beaten the broader stock market. That's why it may be a good idea for some savvy investors to look into the future and see where NVIDIA may be after 5 years, as this could help them decide whether to buy the stock while it is beaten down. Data center business could explode over the next 5 years. The gaming and data center business will continue to be the pillars of NVIDIA's growth over the next 5 years. However, the company is exploring the new areas within these niches that could supercharge its growth. So, like I said, I've talked about them a couple times. They're getting to their chips in the cars, obviously computers and whatever else. Looking down at my laptop here, it's got NVIDIA in it, but they are known for data center graphics cards, but is now making progress in data processing units, DPUs, and central processing CPUs as well. NVIDIA is expected to start sampling its third generation of DPUs, Bluefield 3, this year to tackle artificial intelligence and analytic workloads. There are programmable networking devices that offer a mix of general-purpose computing along with accelerators to speed up tasks. DPUs also reduce the load of a server CPU by taking on the networking and storage functions, thereby improving the efficiency of server processors. What's more, NVIDIA is already working on the fourth generation of data center DPUs and are expected to be released next year. It is not surprising to see why NVIDIA is looking to establish its dominance in the DPU market, likely to be deployed within every data center in the world by 2026 to accelerate workloads. So, like I said, all of these I think are good to have. I don't give tax, legal, or trading advice here on the channel, but just state my opinion. But I don't think you can go wrong with NVIDIA, so it's been a growth stock. So NVIDIA is preparing to take a chunk out of the lucrative server processor market as well. The first servers powered by NVIDIA's Grace Center CPUs are set to hit the market in the first half of 2023. NVIDIA hasn't tapped the server process market yet, a space that's dominated by the likes of AMD and Intel, so that should be interesting as well. That's why the company's move into the market could be a big deal, especially considering that the server process market is expected to generate $42 billion in revenue in the long run. So again, NVIDIA, AMD, Intel, I think they're all good to have. These are all long-term hold for myself, so 5, 10, 20 years. So the overall data center accelerator market is expected to clock annual growth of nearly 39% through 2027, hitting nearly $70 billion in revenue at the end of the forecast period. So NVIDIA could see itself in a stronger position to tap into the huge opportunity over the next 5 years with a broader product portfolio. So always an emerging catalyst that investors shouldn't miss. The gaming business is a tight spot right now thanks to the oversupply of graphics cards. However, the company is taking steps to reduce its dependence on game-related hardware. Cloud computing business is expected to generate $22 billion in revenue by 2030, growing at an annual rate of 57% through 2030. The market's impressive growth will be driven by fast internet speeds and lower costs as compared to purchasing gaming titles and hardware. Chipmaker had generated $12.5 billion in revenue from the video game business in fiscal 2022. This means the potential size of the cloud gaming business in the long run, and NVIDIA's estimated revenue share of 60% in this market suggests that the emerging segment could move the needle in a bigger way for the company in 5 years. All this indicates that investors may want to keep a close eye on NVIDIA and consider going long in the short term. Weakness sends the stock price lower, especially considering that the analysts are still upbeat about the long-term prospects and expect 22% annual earnings growth for the next 5 years. So there you have it, 22% over the next 5 years. So that would end up being a pretty good investment. Again, I don't give tax, legal, or trading advice, just stating my opinion. But any semiconductor is worth looking into. They're all growth stocks in my mind. So from the ones that I've seen, so Taiwan Semiconductor, Intel, AMD, NVIDIA. I'm sure there's some that I'm missing, but if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.